morning, everyone. So the primary function of your tax accountant, and we're putting on the tax accountant hat right now, is tax planning. Okay, our job is to ensure that our clients are paying the least amount of taxes possible within the rules, right? And that can be done in many ways, by deferral, by structure. But what I kind of want to touch on today is part of tax planning is in corporations is declaring dividends. Now, typically, dividends are declared at the end of the year after figure out how much money the shareholders have taken, and then we disperse that based on share ownership and other qualifications. It doesn't mean necessarily that if you take that amount of money out of your company that's what your dividend is going to be. For instance, it could go up. So if you are only taking out, let's say, $20,000 a year, and your corporation can afford to pay you more, and it's a higher profitable company, then you're going to want to take more even though you didn't actually take that much out of the company. And you want to probably take up to the top of the first tax bracket. And in some cases, you're actually going to want to take dividends to get your personal income up to the second tax bracket. It all depends on your personal situation, but that's what the planning is all about. It can also go the other way too. You could take out more money out of your company. Let's say you took out $125,000, okay, out of your company. And it's not a normal thing for you to take out $125,000. So then your accountant could then look at that and say, well, you don't typically take out $125,000. Typically you take out 80 or 90. So maybe you do a dividend for $97,000, which brings them up to the top of the second bracket in 2024. So, and then you save that extra money, that extra $28,000 that you didn't dividend out, can stay in that company as a debt owing to the company, okay, for up to one more fiscal year end. So 2 fiscal year ends combined, it can stay there, and then at which point it becomes income for the shareholder. But then, of course, we're going to dividend that out before that becomes an issue. Okay, so there's lots of tax planning that's involved in your company and in your personal life too. Okay, so you want to make sure that not only are you talking to your accountant, but you're having those conversations about things that maybe they don't know about. Maybe you have something going on that your accountant doesn't know, and maybe there's something that you're doing personally that your accountant can give you some better advice on. Where to put maybe instead of RSPs, it's TFSA or something like that too, right? And on that note, you should probably talk to your financial planner as well, as your accountant's not necessarily supposed to give you that type of advice. But anyways, so I hope that helps. Talk to your accountant. Make sure you got some tax planning going on. It could save you thousands and thousands of dollars year over year. Okay, so take care of yourself, take care of your family, take care of your friends, and be well.
Hey, thanks for watching. If you enjoyed this video, consider subscribing to our YouTube channel. You can also follow us on Facebook, Twitter, Instagram, and TikTok, all of which are linked in the description below. We're more than just an accounting firm. We do business consulting and media creation for our small businesses. Consider checking us out. It would really mean a lot. Hope to see you soon.